Are you an investor in Google? Do you know what the recent earnings report means for you? Picture this. Google, a titan of a company valued at $1.8 trillion, recently stumbled with a 7% stock decline. What was the culprit behind this jolt? Disappointing ad sales. That's right, even the giants can have their off days. But don't let this stock decline send you into a tailspin of worry just yet. It's important to step back and look at the bigger picture. Despite this hiccup, Google's financial performance is nothing short of impressive. Can you think of many companies that boast $70 billion in free cash flow? Or a stellar 15% return on invested capital over the last 5 years? These are not figures to scoff at. They paint a picture of a company that is robust, financially healthy, and ready to take on whatever the market throws at it. Now let's put this into perspective. A 7% stock decline might seem like a big deal, and don't get me wrong, it's certainly not insignificant, but it's also not the end of the world. In the grand scheme of things, this is a small blip for a company that has shown consistent growth and strength over the years. In this volatile world of stocks and investments, it's all too easy to get caught up in the daily ups and downs. But savvy investors know that it's the long-term trends that truly matter. And in the case of Google, these trends are looking pretty solid. So what does this mean for you, the investor? It means that while the recent stock decline may have been a bit of a shock, it's not a cause for panic. Instead, it's a reminder to keep our eyes on the big picture, to remember the strength and resilience that Google has consistently shown, and to consider these factors when making our investment decisions. Despite the recent stock decline, Google's financials remain impressive. Opening. Are you aware of what analysts are forecasting for Google's earnings? As we delve deeper into the financial maze that is Google, it's crucial to understand the predictions analysts have made about the company's future earnings. Let's start with a term you might have heard: earnings per share, or EPS. This is a significant figure for investors as it gives an insight into a company's profitability. Currently, Google's EPS stands at $7. However, hold on to your hats because analysts are predicting a dramatic rise in this figure. Over the next 4 to 5 years, they anticipate EPS to almost double, reaching an impressive $13.45. That's quite a leap, wouldn't you agree? But let's not stop there. Revenue, the total income generated by the sale of goods or services, is another vital measure of a company's financial health. And for Google, the forecasts are just as promising. From its current position at $349 billion, analysts predict a significant surge. They estimate that Google's revenue will grow by a staggering 43%, topping out at a whopping $500 billion within the next half-decade. Now, these are just forecasts, mind you. They're based on a range of factors, including current performance, industry trends, and economic conditions. But they do provide a glimpse into what could be on the horizon for Google. And if these predictions hold true, we could be looking at a company that's set to grow even more influential and profitable in the years to come. So, what does this all mean for you as an investor? Well, it suggests that Google, despite recent hiccups, is far from a sinking ship. Quite the contrary, in fact. These forecasts paint a picture of a company that's poised for significant growth, a company that continues to adapt, innovate, and dominate. Closing. Google is poised for significant growth in the coming years. Do you know where Google's revenue growth is coming from? Well, the answer lies in Google's advertising revenue, which is primarily driven by 2 key players: Google Search and YouTube advertisements. You see, every time you use Google to look up something or watch a video on YouTube and encounter an ad, Google is generating revenue. It's a simple yet highly effective business model that has been fueling the tech giant's growth for years. Over the recent period, Google's advertising revenue has seen a significant upward trajectory. In fact, it has increased by almost 15% quarter over quarter. Now, 15% might not sound like a lot, but let's put it in perspective. Google is already a multi-billion-dollar company, so a 15% increase in one of its primary revenue streams is a substantial amount of money. This surge in advertising revenue is a testament to the robustness of Google's business model. It also speaks volumes about the effectiveness of Google Search and YouTube ads in reaching consumers. These platforms have become integral parts of our daily lives, and their influence on consumer behavior cannot be overstated. So, whether it's through Google Search or YouTube, advertising continues to be a significant driver of Google's revenue growth. And as the world becomes increasingly digital, this trend is expected to persist. Google's advertising revenue continues to show strong growth. What does the stock analyzer tool suggest about Google's stock price? As we delve into the numbers, our trusty stock analyzer tool provides some interesting insights. It suggests a range of potential prices for Google's stock. On the lower end, we have $120, while the upper limit stretches as high as $230. Nestled comfortably in the middle, we find the sweet spot of $168. Based on these figures, if you were to purchase Google stock at today's price of $142, you could potentially see a return of 11%. That's a tidy sum, wouldn't you agree? As always, it's important to remember that the stock market is a fickle creature, and prices can fluctuate wildly, influenced by a myriad of factors. However, even with this inherent unpredictability, Google's stock has consistently demonstrated a robust resilience. With its solid financials, impressive return on invested capital, and promising growth in advertising revenue, Google remains a formidable player in the tech industry. The numbers don't lie, and they paint a picture of a company that, despite a recent dip, is still very much on an upward trajectory. So, should you find yourself contemplating an investment in Google, consider the analysis we've discussed today. While there may be fluctuations, Google's stock has the potential for a positive return. Let's quickly recap what we've discussed today. Google, now a $1.8 trillion company, has recently seen a 7% decline in its stock due to underwhelming ad sales. However, it's important to remember that despite this drop, Google's financial prowess remains robust, boasting $70 billion in free cash flow and a 15% return on invested capital over the last 5 years. Looking forward, analysts are predicting an increase in earnings per share from $7 to $13.45 in the next 4 to 5 years. Revenue is also expected to rise from $349 billion to a staggering $500 billion. This growth is largely driven by the steady increase in advertising revenue, particularly through Google Search and YouTube ads. According to our stock analyzer tool, the projected return could be around 11% if you buy at today's price of $142. Keep these points in mind as you consider your future investments in Google.